Hello, welcome to Geojit Spotlight. During the last 1 year, India is hugely underperforming other markets. Nifty is down around 4% from the September 2024 peak. Most markets have done very well during the last 1 year. For instance, the returns from other markets are as follows. US S&P 500 16%, Japanese Nikkei 20%, Euro Stocks 50 11%, Hong Kong Hang Seng a massive 38%, South Korean Kospi 33%. India's underperformance is huge. The relevant questions are: why this underperformance? When will the market rebound? What should be the investment strategy? Let's get the issue in perspective. In the global market rally following the COVID crash, India was one of the best performing markets. Nifty shot up from 7,511 in March 2020 to 26,277 in September 2024. This is returns of more than 250% in 4.5 years. The mid and small cap indices did even better. This spectacular rally attracted millions of new investors into the market. The number of demat accounts exploded from around 4 crores in April 2020 to above 20 crores now. The new investors started buying every dip in the market without any consideration for valuations. Valuations shot up to high levels. Valuations for mid and small caps reached unjustifiable levels. Remember, we have warned about high valuations in the broader markets many times through Geojit Spotlight. An important point to understand is that the Nifty rally from 7,511 to 26,000 range had fundamental support from earnings growth. Earnings growth was 24% CAGR during 2021 to 2024. But earnings growth sharply declined to mere 5% in FI25. This is a sharp dip. Poor earnings growth cannot sustain high valuations. FIIs turned big sellers in India. FIIs sold in India and moved money to cheaper markets like China, Hong Kong, South Korea, Taiwan, and even developed markets where valuations were cheaper. Even now, valuations in most markets are cheaper than the valuations in India. FIIs sold equity for rupees 1,21,210 crores last year in 2024. And this year in 2025, so far, FIIs sold equity for rupees 1,80,000 crores approximately. This is massive selling. In brief, the combination of poor earnings growth, high valuations, and sustained FII selling are impacting the market. Even now, the market valuations are higher than the long-term average. Mid and small cap valuations continue to be excessive. But it is a fact that India deserves premium valuations because India has the best long-term growth story among emerging markets. Investors should always remember that it is impossible to time the market. No one can predict when the market will bottom out and start rallying. So, what should investors do now? India's macroeconomy is in good shape. The government has implemented growth stimulating policies this year. The income tax cut provided in the 2025 budget and the game-changing GST reforms implemented this month are growth stimulating reforms. The rate cut implemented by the Monetary Policy Committee is a big rate cut of 1%. Combination of these measures will certainly stimulate economic growth in India, and this will lead to recovery in corporate earnings. 15% corporate earnings in financial year 26-27 is very much likely. The market will start discounting this soon. An important takeaway from India's underperformance and the superior performance of other markets is the need to diversify investment across geographies. Now it is possible to invest in other markets through the mutual fund route. There are Indian mutual funds investing in other markets, the investment is very simple, just like investing in mutual funds in India. Therefore, investment strategy now in this time of drift in the market should be an investment strategy based on accumulating high quality stocks. Buy automobile stocks on corrections. Automobile stocks have run up after the GST announcement, but they can likely continue to perform for long period of time. Large caps are fairly valued now. Defense stocks are fairly valued now. The investment strategy now should be systematic investment. A lot of patience will be required. Therefore, systematic investment and patience are the keys to successful investing now.